Good morning, students. Welcome to the session of Cost and Management Accounting. Myself, CA Vibhavathavan. So we'll be starting with the cost accounting system today. So far, you must have done material, labor, overheads, cost sheet. So now we'll be moving to the cost accounting system. We'll be moving to the maintaining of records, maintaining of cost records. So, so much to learn in this session. So, hope you will be into it. All right. So, cost accounting system, we maintain the cost books under two systems. Since we also maintain financial accounts, you must be aware of profit or loss account, trading account, manufacturing account, balance sheet, and notes to accounts. So that is the setup for financial accounting. But in a cost accounting department, we also prefer to maintain cost records for many purposes. We need the ascertainment of cost, computation of cost. We need the records to help us to do cost control, cost reduction. So for so many purposes, we need cost records also. Now there is a question before the organization, shall we keep both the records or shall we integrate? So having said that, there are two types of system, non-integrated cost accounting and integrated cost accounting. Non-integrated means cost records are separate and financial records will continue to be maintained like the way we used to maintain. So since there are two cost records, but ultimately we should have to have one profit. We cannot have two profits in one organization. So we have to reconcile both the records to reach up to the same profit at the end of the point or whatever is the end of the accounting year. All right. So non-integrated means two separate set of books, cost records and financial records. Integrated means only one set of books, cost accounting and financial accounting in one set of books. So how we do it, how we maintain the records, we have to understand. Cost and financial accounts, if they are maintained in combined way, we combine it, we integrate it. It is called as integrated, while if the records are maintained separately, we call as non-integrated. When non-integrated system of accounting is there, then we have to reconcile. So reconciliation happens only when there are a non-integrated system. If we are maintaining one set of books, then there is no point of reconciliation. Reconciliation means matching the cost records with the financial records. We have to match only when there are two set of books. So we don't have to match when there are only one set of books. With what we will match when there are only one set? So when we will be having non-integrated, that means we will having separate set of books. Only then we have to match the cost records and the financial records. So reconciliation happens when there it is a non-integrated system. Then we match the all expenses and all the overheads of cost accounting and the financial accounting. Non-integrated system. So we have to understand the non-integrated system first. What all cost records are maintained, what all, how they will reconcile, we'll do at the last segment of the session. All right. So now, if you understand the non-integrated system, integrated is very easy to understand. All right. So non-integrated is actual the cost accounting system, whatever records, whatever accounts we maintain. So here we form the basically the ledgers first. So there are, as because it's a cost accounting system, it's a cost ledger. Now a cost ledger has all those accounts which are impersonal and which helps in self-balancing. All right. So cost ledger helps in bridging the gap between financial and cost. It bridges the gap. You will understand once we'll do the concept and the questions. Stores ledger is basically for all the materials which come to the organization and the material which goes out for production. All right. So stores ledger is coming out from outside. We are purchasing the material. So we are purchasing and then we are issuing for production. So stores ledger basically accounts for every movement of material, purchasing from outside and then issuing to the production or to other departments. Work in progress is actually a job ledger. Job ledger means where the cost of production will be calculated. The main production process goes on. That's why it's called a job ledger. The entire cost for particular job or operation or any cost object will be there in the work in progress. Finished goods again. So it contains the account for each item of finished product. See, these are the ledgers we make. Then the principal accounts. So we have we maintain the accounts in those ledgers. So under the ledgers, we maintain all these accounts. Cost ledger control account is maintained under cost ledger. All right. So this account is maintained under cost ledger. It's a general ledger adjustment account. So GL account. The GL account is basically to complete the double entry. See, we are not integrating with financial. We are maintaining a separate set of books. Since we are maintaining a separate set of books, we have to make a double entry. All right. So to make the other part of the entry, we use the GL account or cost ledger control account. So any account the name you can use as general ledger also, or the name you can use as cost ledger also. The net profit or loss from costing profit or loss account is transferred to this account. So once you will understand it better. But just keep in mind that cost ledger control account is basically to bridge the gap between cost record and financial record. So it helps us to pass the double entry. All right. Stores ledger control account, as I told you, it's under stores ledger. We make this account. And this is for the movement of all the material and we purchase from outside, and then we issue the material for production or to other departments. Then principal accounts, like material, we have wages. So wages, again, direct wages and indirect wages. So wages, again, we are paying for the wages. So incurring the wages and then charging the wages to production or other departments. So charging the wages to production and charging the other indirect wages to other departments. So wages control takes care of both direct wages and indirect wages. That means direct labor and indirect labor. Manufacturing overhead, since you must be aware of the cost sheet now. Yeah, so cost sheet, the concept of cost sheet is going to help you in this accounting system. So in cost sheet, there are 3 types of overheads. Factory overhead, so you can use manufacturing or production or works or factory. Any 4, these are the any 4 terms you can use for factory overheads. You call it manufacturing, you call it production, you call it works overhead, or you call it a factory overhead. All the 4 you can use the name. So this is again one of the overhead, and how we do it, you will understand. Then moving to WIP control account, again under work in process ledger, we have work in process control account. So work in process control account, it includes all the cost of production. Yeah, the entire cost. Material goes into it, labor goes into it, expenses goes into it, indirect overheads goes into it. So work in progress takes care of the production cost. Administrative overhead. So this is the second overhead, administration, office and administration overhead. So again, we first incur it and then we absorb it. So overheads we absorb, all right? You must have studied under overheads unit. We always absorb the overheads, all right? So in financial accounting, we use the actual overheads. In cost accounting, we use the absorbed overheads. We will be giving some information in the question at what unit, at what rate, and at what percentage we absorb the overheads. Always remember, cost accounting mainly is an absorption costing. We absorb the overhead. So direct materials are always allocated, and indirect cost is always allocated, like direct material, direct labor. Indirect cost, or we call it as overheads. Indirect cost we call overheads, and there are 3 categories of overheads: factory overhead, administration overhead, selling and distribution overhead. All these overheads are indirect cost. Indirect cost is always absorbed on some basis, on some rate, on some percentage. You must have done in overheads unit, all right? So the basic understanding of overheads and cost sheet is important to understand cost accounting system. Yeah. Moving further, we have finished goods control account. So from WIP, that is work in process, we move to the finished goods control account. And then finished goods will take you to the sales. Selling and distribution overhead is the third category of overhead. So selling and distribution overhead takes you to the, again, it is incurred and then it is absorbed under some basis. Then we have cost of sales. So WIP, finished goods, and then cost of sales. And of course, costing profit or loss account. Everything culminates into profit or loss account. So we have financial profit or loss account and we have costing profit or loss account. Both the records should be there with you. So then we have to reconcile. Since there are two profit or loss accounts, since there are two records, so we have to reconcile. And overhead adjustment account. So it's not mandatory to make overhead adjustment account. We can adjust also. I'll let you know how we do it. So overhead adjustment account is, again, what is the gap? How much overhead is incurred and how much they are absorbed. So there is a gap. That is why we have an overhead adjustment account. So we have three overheads. Might be production overhead is under absorbed or office overhead is over absorbed. If I have incurred, what actually I mean by this, let us say I have incurred 10,000 as factory overhead. All right. So actual overhead incurred we include in financial account, but in costing we always use the absorbed overhead. Absorbed. So how much out of 10,000, how much will be absorbed? Let us say out of 10,000, only 8,000 is absorbed into the cost accounting. Only 8,000 is absorbed. So 10,000 is used in financial accounting and 8,000 will be used in cost accounting. So out of 10,000, 8,000 is absorbed. So this is a case of under absorption. All right. That means we have absorbed less than we have incurred. So this is under absorption. If it is a reverse case, we have incurred 8,000, but we have absorbed into the costing 10,000. That means we have over absorbed the overheads. We should have absorbed 8,000, but we have absorbed 10,000. So any which ways, and you will understand again better once we do the numericals on it. All right, so I think now I can see the students also. Good morning, all of you. Good morning, students. So welcome to the screen also. All right. So these are all the accounts we make, and then we have to understand a scheme of entries. Before we start the scheme of entries, let me just explain you. Okay, see what exactly is the format of cost accounting system. Just try to understand. See, we have, you can say, we have this WIP, work in process. Okay. So this is the main crux of cost accounting system. The material will go into production, so WIP. Then it will lead you to finished goods. Finished goods. Clear? So work in process control account. If I write it to be very, very precise, work in process control account, finished goods control account. All right. It is just the sequence of the cost sheet from WIP to finished goods. Then we can take you to cost of sales. Clear? So these three are the main control account which we have to use. Cost of sales control account. Clear? Now this will remain the same whether you follow integrated or non-integrated. That you have to understand. Clear? So these three will remain the same. There is no change integrated or non-integrated between work in progress, finished goods and cost of sales. So students, what you need to understand is whatever entry we pass. For example, we are passing entry for purchase of material. What entry we pass under financial accounting if we are purchasing material? We used to pass entry like purchases or materials account, all right? Purchases account debit or goods account debit, whatever you used to write, purchases or goods. Account debit to bank or cash or creditors. This we used to do in financial accounting. This is a journal entry we used to pass. Now, how to convert this journal entry into cost accounting system? Here, Now, how we have to use the cost terminology again. If we are using cost accounting, we have to use the cost terminology. So purchase and goods will be converted. The name we use it as stores ledger control account. Clear? Stores ledger control. Stores again where the inventories are kept. So whatever purchases we will make of the raw material or for any goods, we have to store in inventory. So purchases of goods is the term for financial accounting. We will use a similar term for cost accounting, and the term is stores ledger control account, right? So instead of using purchase or goods, we will be using stores ledger control account. Now, to bank or cash or creditors, they are the financial terms. We can't use it. Now, since we can't use these terms in cost accounting, how we will complete the double entry? Then I told you to complete the double entry, to bridge the gap between cost accounting and financial accounting, we use the term cost ledger control account. So cost ledger control account is an account just made to complete the double entry. Clear? To complete the debit and credit aspect, we just create that account, cost ledger control account, so that we at least have a double entry. So the entry will be stores ledger control account debit to cost ledger control account, right? So we'll be having now financial account entry. I'm repeating: purchase account debit to bank or cash or creditor. In cost accounting, we use stores ledger control account in place of purchase or goods, and cost ledger control account because bank or cash or creditor are the financial terms. These are not cost accounting terms. So, but we have to make a double entry. So we use a cost ledger control account. All right. So this will be the entry for it. Now, if I talk about wages. Okay. Now, if I talk about wages, which entry you pass when we talk about wages? What entry we pass when we and make the entry in financial account? We make wages account debit to cash. This is the entry we pass in financial accounting when we pay the wages. Now here wages will be converted into wages control account. Here, so wages will remain wages, but we will just add the wages control account debit to cash. We cannot use because it's a financial term. Now, in place of cash, what we should use in cost accounting? We will use that term which will complete the double entry to cost ledger control account or general ledger adjustment account. Any term you can use. All right. So cost ledger control account will be using in place of cash. Right. So this is the way we convert the financial journal entry into a cost accounting journal entry. Right, and this is the way we will bring them into the cost accounting records. We have to pass a debit and credit entry to get the information, a transaction into the cost accounting. All right. So this is the way how we do. Now, what is the process and what is the format? Let me just explain you now. So this is clear: work in progress, finished goods, and cost of sales. Now, for first, whatever, see, the fundamental is whatever is coming from outside, we have to use a cost ledger control account. So this is which is coming from outside. Anything which is coming from outside will come through cost ledger control account. And then this is the internal entries of cost accounting. It has nothing to do with cost ledger control account, right? So for example, material purchase. So if we are purchasing the material, we have to use stores ledger control account and cost ledger control account. If we are paying for wages, we will be using wages control account and cost ledger control account. If we are incurring the overheads, factory overheads or admin overheads, yeah, or selling and distribution overheads. So if we are incurring them, again, we have to incur them first, cost ledger control account. So whatever is coming from outside, it will come through cost ledger control account. Once it reaches the cost accounting system, cost ledger control account has no role to play. Clear? So this first part will be as per integrated or non-integrated. Clear? So the first part will be different in integrated and non-integrated, but the internal setup has no change. Whether you follow integrated or non-integrated, it will remain to be same. So material will go to production, wages will go to production, overheads will go to different setup, factory will go to WIP, admin will go to finished goods. I just make it more clear so that you understand. So material will go to WIP, wages will go to WIP, factory overhead will go to WIP, admin overhead will go to finished goods, selling and distribution will go to cost of sales. Exactly the format of cost sheet. Just remember the format of cost sheet. Clear? In cost sheet, what happens? We add the factory overheads to the works cost. We add the office and administration to the finished goods. We add the selling and distribution at the cost of sales level. Clear? So the same format we have to use. So this is how integrated and non-integrated system works. The first part, whatever comes from outside, basically will be different for integrated or non-integrated. The internal setup in a cost accounting system, once it enters the system, then there is no change. Clear? So WIP, finished goods and cost of sales. So this is the internal system, the production part. All right. So stores will come from outside here. Then wages will also come. Wages will go to WIP. Stores will also go to WIP. If we talk about overheads, there are 3 overheads. Factory will go to WIP. Admin will go to finished goods. And selling and distribution overheads will go to cost of sales. So this is the whole setup now. So, and again, whatever is coming from outside, we are purchasing material, we are paying for wages, we are paying for overheads, whatever is coming from outside, here we have to use the cost ledger control account as part of double entry. So stores ledger control account debit to cost ledger control account. We are paying wages, wages control account debit to cost ledger control account. We are paying for overheads, factory overheads account control account debit to cost ledger control account. Admin overheads control account debit to cost ledger control account. Selling and distribution control account debit to cost ledger control account. Once it enters the cost accounting system, these are the internal process, internal setup. Now, once it is going to WIP, now then what is the process? WIP is receiving WIP debit to stores ledger. Wages are going to WIP debit to wages. So in the internal setup, internal transfer, cost ledger control account has no role. All right. So keeping this in mind, let us now understand the entries, how we pass. Okay. Any doubts so far? Yes. Yes, all prime costs, Darshan, all prime costs are transferred to the WIP, all prime costs, direct wages, direct material, direct expenses, always to WIP. But again, direct expenses, if they are incurring on some job, there are certain direct expenses which go directly to the factory. Then we can charge it as factory overheads also, because factory overheads will ultimately go to WIP only. All right. If let me just, of course, if I assume that you know the cost sheet format, but still, let us keep a cost sheet format here ready so that you know. Let us just quickly brush up what all the cost sheet is. So cost sheet starts with raw material, direct labor, direct expenses, and we get the first landmark, which is called the prime cost. Clear? So this prime cost will go to the WIP. Then we add factory overheads. So see, factory overheads are added to the prime cost to get the works cost, gross works cost. Then at this stage, we add opening stock of WIP. Then we deduct closing stock of WIP. I assume you must have done the cost sheet by now. And then we get the works cost. So this is gross works cost, you can say, and this is the works cost. All right. So factory overheads goes to WIP account. Clear? Factory overheads goes to WIP control account because it is part of the production process. After WIP, the works cost, we add admin overheads. All right. So admin overheads, we get cost of production. So cost of production, that means finished goods. So admin overheads will go to finished goods control account because they are added at this stage. Opening stock of finished goods less closing stock of finished goods. Clear? So this will give you cost of goods sold. Then we add selling and distribution overheads. So they go to cost of sales control account. Clear? Because they are added at this level. And then we get the cost of sales. Clear? So this is the format and the sequence. So factory overheads will go to WIP. Admin overheads will go to finished goods control account. Again, following the format of cost sheet. And selling and distribution overheads go to cost of sales. Clear? So this is the basic format of cost sheet. This helps in understanding the non-integrated system or integrated because this is an internal transfer. Clear? So now you will be understanding in a better way. So we are purchasing material. If you are purchasing material, I told you financial entry would be material debit or goods debit or purchases debit to cash. But here we use material control to cost ledger control account. See, whenever we are purchasing from outside, cost ledger control account has to be there. What would be the entry in financial accounting? It would be material or purchases account debit to cash or bank. So we cannot use cash or bank. We will be using cost ledger control account. So in place of cash, bank, creditor, debtor, we use cost ledger control account. Clear? So these are all the financial terms. We cannot use financial terms. In place of that, we use cost ledger control account. I'm repeating. Cost ledger control account is only used when you are entering the transaction into the system. Once the transaction is already there, for example, when we are purchasing material from outside, we have to use cost ledger control account. But when the material is issued to production, it is internal thing. It's an internal process. Cost ledger control account has no role to play. So purchasing material, yes. Material account debit to cost ledger control account. Transferring material to production, WIP debit to stores ledger control account. Cost ledger has nothing to do with it. So because cost ledger control account is used in place of cash or bank or creditor or debtor respectively in purchase or sale, whatever. Clear? So internal transfer in the cost accounting system, cost ledger control account has no role to play. Yeah. So in place of material control, we can directly use stores ledger control account. Yeah. So they have passed two entries. They have created material control, then they have transferred material control to stores ledger. So we can pass only one entry, which is called as stores ledger control account debit to cost ledger control account. We can just pass one entry. Clear? So this is the entry for material purchase. Okay. Then we are purchasing material for special job directly for the production. We are not purchasing material to store. We are purchasing the material directly for the job, for the order. WIP will be debited directly. It will not pass through stores ledger. All right. So normally what happens is, if I tell you here, normally what happens is, see, this is WIP. So stores will be transferring the material to WIP. Then wages will be transferred to WIP. Then factory overhead will be transferred to WIP. Clear? So this is the first step. Then the special purchase can go directly to WIP also. Special purchase, that only for the production, not for the store. Clear? So if any special purchase we are doing for any material for a particular job, it can go directly through WIP, not routed through the stores. Clear? So once if there is an inventory, that will go to WIP, but a special purchase for a particular job can go directly to WIP without going through stores ledger. All right. So that you need to understand. So if you are purchasing directly, now since we are purchasing, stores ledger control account has to be there. So if you are purchasing, what should be the entry for normally we credit cash or bank or creditor, whatever. But here in place of cash or bank or creditor, we use cost ledger control account. So that exactly I was explaining you. Whatever is coming from outside, it has to come through cost ledger control account. But once it is inside the system, then cost ledger control account has no role to play. You will understand now. Material returned back to the vendor, returns. So cost ledger control account debit to stores ledger, just reverse the entry. All right. So when we purchase the material, the entry is SL control account debit to CL control account, stores ledger to cost ledger. When we return, it's CL to SL, just reverse the entry. We are returning back to the supplier, to the creditor. Material, direct material issued to production. There is only one production account, that is WIP. There is only one production account. Anything which is going to production, material, labor, expenses, all your prime cost and factory overhead. 4 things can go to WIP. Direct material, direct labor, direct expenses and factory overhead will go to WIP account. WIP account is also called as production account, where the main cost of production will be calculated, right? So now the material is issued to production. It's now the internal process. Material is going to the production. See, this is the entry which we are talking about. So now material is issued to production. Material is issued to production. So where it will give, it will be debited, and from where it is coming, it will be credited. So WIP will be debited and stores will be credited. So whatever control account you are sending it to, it will be debited. From where it is coming, it will be credited. All right. So this way you can understand. So direct material issued to production, WIP will be debited as it is receiving, and stores ledger will be credited as it is giving to the WIP production account. Indirect material issued to production. Indirect material means overheads. Production overhead means factory overhead. So indirect material issued to production. See, this is an internal transfer. Cost ledger control account has no role here. Yeah, because it is an internal transfer from stores to production. It has nothing to do with the debtor or the creditor or cash or bank. That's why cost ledger has no role to play. So production overhead control account debit to stores ledger control account, because material is going from stores to production. Overhead. Why overhead? Indirect material. Direct material will directly go to WIP. Indirect material will first go to production overhead and then it will pass on to the WIP. Material returned from shop to stores. Shop means production. Shop, where actual production is going on. Production means WIP. So material is going back from WIP to stores. So stores, whatever control account is receiving, it will be debited. Whatever control account from where it is going, it will be credited. So it is going from WIP to stores. So stores will be debited and WIP will be credited. Material worth rupees is transferred from job 1 to job 2. So job 2, what is receiving will be debited and job 1 is giving will be credited. All right. So the receiving control account will debit it and giving control account will be credited. Okay. Which last part you don't understand? All opening balances of financial accounting be transferred to cost accounting. So just wait for a while. The transferring of accounts, how we do, there's still some time. Just understand the concept first. You will understand the process. Don't worry. All right. And current action, so there are no dates for these journal entries, ma'am. See, it is financial accounting. We normally use the annual accounting year here, almost the 12 months setup. In cost accounting, we can use 6 months or 12 months. But yes, because we are making the annual records, we have to make it in annual basis only, because otherwise we can't do reconciliation here. If we are maintaining cost records for 6 months, we cannot compare the financial records of 1 year with the 6-month cost records. Yeah. So there are many other records or reports in cost accounting we make for our purpose of for 15 days, for a week, for a month, for fortnight, for 6 months. But cost accounting system is actually made for the annual setup because we have to reconcile with financial accounts. Yeah. Material ₹100 is issued from stores to repairs. Again, it's an internal transfer. Cost ledger control account has no role to play. So from stores to repairs. To repairs means, again, repairs will be your indirect expenses. It will go to production overhead. Yeah. And from where it is going? From stores. So stores will be credited and production overhead will be debited. So where it is going, it will be debited. From where it is coming, it will be credited. All right. Moving further, direct wages paid to workers. Now you have to pay. So first you have to pay for wages. If you are paying for wages, what entry we pass in financial accounting? Wages account debit to cash or bank. And now since we are into cost accounting, wages will be converted into wages control account debit. Clear? 2, we cannot use cash or bank. In place of cash or bank, what we have to use? Cost ledger control account. Is it clear? So first, whatever we have to pay, something which is coming from outside. So expense we have to first pay or we have to incur. It has to make an entry into the cost accounting system. To make an entry, it has to route through cross ledger control account. I'm repeating. Any expense has to come into the cost accounting system. If it is coming for the first time, it has to come through cost ledger control account. And once it is inside the system, then cost ledger control account has no role to play. Then we have internal transfer. Clear? So first we have to pay the wages. So wages control account debit to cost or ledger. So this is in place of cash or bank we have used. We can't use cash or bank, so we are using cost ledger. Now, direct wages will always go to WIP. Let me just write it over here. So remember this. Direct wages will go to WIP. Indirect wages will go to production overhead or any other overhead. It can go to admin also. But if nothing is mentioned, it has to go to production overhead. Clear? So wages, we have to, whether direct or indirect, first you have to route it through cost ledger. You have to pay first, whether it's direct or indirect. And then the direct will go to WIP, indirect will go to production overhead. So see, indirect wages paid to the workers. So first, direct or indirect, it has to be paid first. So it has to route through cost ledger control account. Clear? Now, indirect is going to production overhead. Indirect. So indirect production overhead control to wages control. And direct wages will go to the WIP. So how will you pass the entry for direct wages going to WIP? WIP debit to wages control account debit. All right. Now, indirect wages to administration. It can go to administration also. So first you have to incur it. First you have to pay it or you incur it and then you transfer it. So transfer has nothing to, cost ledger has nothing to do with the transfer entry. So admin overhead account debit to wages control account. Clear? So wages control wages could be admin wages also, production also, indirect could be of any of the three. Moving further, indirect wages paid to selling and distribution. You first have to incur it. You first have to pay it or whatever, you have to incur it. It has to route through cost ledger. Once it is incurred or paid, then it's a transfer entry. You have to transfer to selling and distribution overhead. So wherever you are transferring, it will be debited. From wherever it is coming, it will be credited. So now wages control is transferring to selling and distribution, right? Direct expenses. If you are incurring any expenses directly for any job, it has to go to WIP. Because WIP, the main production process is going on there. Clear? So because it is incurred directly from the outside, it is coming. It has to route through cost ledger control account. You are directly paying for job number 12. So whatever is coming from outside, it has to come through cost ledger control account. Clear? Now overheads. So these expenses are incurred. So they will come through cost ledger control account. They are incurred first, incurred or paid. Clear? So they are incurred or paid, whatever. So they have to route through cost ledger control account. Carriage inward directly to factory. It can go to production overhead control account. It's coming directly, so it has to come through cost ledger. And then whatever is recovered. Clear? Production overhead recovered. Recovered means absorbed. It's an internal entry. I told you production overhead or factory overhead will be absorbed to WIP. So WIP debit and to production overhead control account. So now production overhead control account is going to WIP. Moving further, administration overhead. So administration overhead, you have incurred first, recovered. Recovered means absorbed. So where administration overhead will be absorbed to? It will be absorbed to finished goods, and administration overhead control account will be credited, finished goods will be debited. Selling and distribution overheads recovered. That means now it will be absorbed. Selling and distribution is absorbed to cost of sales. So it will be debited, cost of sales will be debited, and overhead control account will be credited. Under and over recovery of overheads, that we will understand once we do the question. Okay. So again, this is profit or loss. We'll understand once we do the question. Okay, so this is the setup, what I was talking about. See, this is the main production account. So material will come, material control means stores ledger. Clear? So material will come from stores ledger, wages will come from wages control, and production overhead will go to WIP. So these three things will culminate in the WIP, and we can calculate the factory cost of factory. Clear? Then this works cost, the finished goods will go to finished goods control account. Admin overhead will be coming to finished goods control account, as I explained you in the cost sheet format. Then it will go to cost of goods sold or directly to cost of sales. Selling and distribution comes to cost of sales. Clear? So main account is the WIP, and whatever so production overhead will be absorbed. So this is absorbed. Production overheads absorbed to WIP. Admin overhead are absorbed to finished goods, and selling and distribution are absorbed to cost of sales. Clear? So these three overheads are absorbed at different levels. Production overhead absorbed at WIP level. Administration overheads will go to finished goods control account. Selling and distribution will go to cost of sales control account. So three overheads are absorbed at different levels. The direct cost, material and wages, will go to WIP. Clear? Okay, so now it's the time to do the question. So students, actually now how we have to do, you have to make what accounts when you have to make. So just make the ledger accounts. How we do it? What all accounts we have to make? First of all, cost ledger control account. You always have to make a cost ledger control account. Clear? Then you have to make stores ledger. Stores ledger. So next, first category is cost ledger. It's an independent account. Second category is stores ledger and wages control. Stores ledger control account. These are all control accounts. Clear? Stores ledger and wages control account. This is the second category. The third category, you have to make WIP control account, the three landmarks, the main landmarks, finished goods control account, and cost of sales control account. So this is the third category. So account number 4, 5, and 6. All right. Then the next category is the overheads control account. Production overhead control account. Then admin overhead control account, and then selling and distribution overhead control account. So 7, 8, and 9. Clear? This is the next category, the overheads category. And of course, the last independent account is costing, profit or loss account. So in cost accounting system, in non-integrated, you have to make these 10 accounts. Clear? This minimum 10 accounts you have to make. Cost ledger control account, the first category, independent account. Stores and wages, these are first incurred, and then they are transferred. They are first incurred and then they are transferred. These three are all internal accounts. Cost ledger control account has nothing to do with them. Clear? Then production overhead control accounts, all three overheads account. Again, these are first incurred and then they are absorbed. Clear? And yes, the costing profit or loss account to calculate the costing profit. Clear? So just make 10 ledger accounts very quickly. All the accounts very quickly you have to make. Cost ledger control account. Clear? Just make quickly the ledger accounts. It's just the format of a ledger. I hope you know the ledger account, debit and the credit and the particulars and the amount. And there I'm making stores ledger. Okay, so I'm making a stores ledger. Just make proper ledger accounts. I'm just making it to show you. Then we have to make wages control. All right. Then we have to make your WIP, the main production account. Then we have to make the overheads account. So production overhead, admin overhead, and the selling and distribution overhead. So 10 accounts you have to make, and yes, the costing profit or loss account, and one more cost of sales account. Clear? So again, this is the whole sequence. So 10 accounts we generally make when we talk about the whole sequence. Clear? So I hope you are ready with the 10 accounts. Now let's start. So students, first of all, stores ledger, work in progress and finished goods, they are the stock accounts. So they have the balances, the opening balances, which are the debit balances. And then the overheads control account, the balances there, because overheads are always under absorbed or over absorbed. So there will be some balance in the overheads, or we can transfer to costing profit or loss account also. And cost ledger control account always basically, see, these are the three debits and this is one credit. So cost ledger control account will always the balancing figure. All right. So it has to tally. So all your balances will tally with the cost ledger control account. So it will basically bridge the gap between debit and credit. It is only passed to make the double entry, right? So you please make all the 5 accounts, all the 3 control accounts, and just post the balances. So let me just show, then we'll come back. Okay, this is the entry. So let us first discuss the entries, then we'll do the accounts. So these are the balances. I hope you have made 10 ledger accounts, all of you. Clear? Just quickly practice the entry. Finished product at cost. Finished product at cost means it is the product of the WIP. Finished product at cost. So that means cost of production. It is the WIP production which has been, it is the outcome, the output of WIP. So finished product at cost, WIP will be debited and finished goods control account will be credited. Sorry, it's just the reverse. It will go to finished goods. Finished goods at cost means finished goods control account will be debited and WIP control account will be credited. So goods are transferring from WIP to finished goods control account. Finished product at cost. That means it is the output of WIP account. It will pass from WIP to finished goods. So finished goods control account will be debited and WIP account will be credited. Manufacturing overhead incurred. Incurred means they are created. They are first paid. So they are incurred means manufacturing overhead or production overhead. So manufacturing overhead control account debit. Cost ledger control account will be credited. So manufacturing overhead control account debit to cost ledger control account. Clear? Because it is incurring. It is coming from outside. Raw material purchase. Purchase again. You are purchasing it. Cost ledger control account has to be there. So stores ledger control account debit. Cost ledger to cost ledger control account. So cost ledger control account will be credited. We are purchasing the raw material. So stores ledger will be debited. Cost ledger will be credited. Factory wages and indirect labor. So direct and indirect we can assume. Factory wages we can assume as direct, and indirect labor is indirect. Clear? So wages control account debit. Wages control account debit, since it is coming for the first time, cost ledger control account will be credited. Wages control will be debited for both direct and indirect, both. Clear? Direct will go to WIP and indirect will go to production overhead. I'm repeating. First of all, you have to see. First, you have to incur the wages. Clear? So wages control account debit to cost ledger control account. It is for both direct and indirect, both. Clear? And then it will be transferred to the respective. So first is incurring or paying. So that means control ledger will come. Now you are transferring. So in transferring, control ledger has no role to play. Direct will be transferred to WIP. So WIP control account debit to wages control. Clear? Now we are transferring from wages to their proper place. Indirect will go to production overhead. So production overhead control account debit to wages control account. Clear? So first entry, when we incur the wages, it has to be routed through cost ledger. Once it is inside the system, then the transfer entry. Cost ledger has nothing to do with the transfer entry. From wages control, it is going to WIP. So WIP will be debited for direct wages, and for indirect wages, it will go to production overhead. Clear? So this is how it is done. Cost of sales. Cost of sales means it is going to cost of sales from finished goods. Clear? I told you the format. WIP, then finished goods, and then cost of sales. It has to go through this. So cost of sales means cost of sales will be debited and finished goods will be credited. Clear? So cost of sales control account debit to finished goods control account. Material issued to production. Issued to production. It's an internal entry. Cost ledger has nothing to do with it. Issued to production. So which control account is receiving? Production, WIP. So which control account is receiving will be debited. From where it is coming? It is coming from stores ledger. So stores ledger will be credited. Whatever control account is receiving will be debited. From where it is coming will be credited. So material issued to production, WIP will be debited, stores ledger will be credited. Sales returns at cost. Sales are returning at cost. That means it is again going to finished goods. Sales returned at cost. Cost means finished goods will be debited. It is again going to finished goods. And COS, cost of sales, will be credited. Sales at cost. Clear? So finished goods will be debited. It says returns. And cost of sales will be credited. Material return to suppliers. Suppliers means it's going out. If it's coming from outside or it is going outside, it has to route through cost ledger control account. So entry will be reversed. Material return to suppliers. Suppliers means cost ledger control account will be debited. And from where it is coming? Stores. So stores will be credited. So CL cost ledger will be debited and stores ledger will be credited. All right. So cost ledger control account debit to stores ledger control account. Manufacturing overhead charged to production. Charged to production. Production means, see, manufacturing overheads were incurred. Charged means absorbed. Now, manufacturing overheads will go where? Where manufacturing overheads will go? It's going to production. Production means WIP. WIP debit to production overhead control account. So it is going from manufacturing to production. It is absorbing in WIP. Here, so WIP debit to production overhead control account. So these are the entries. Just to cross-check the entries. Anything you don't understand, please let me know. See, carriage invoice generally we charge to WIP, but since it was going directly to factory, we can charge it to production overhead. You can charge it to WIP also, because production overhead generally, again, it will be absorbed to WIP. All right. So it's an indirect route. But yes, you can charge in carriage inwards to WIP also. Clear? Because it was written direct to factory. So again, it's not clear whether it's on materials or purchases. So we have taken to the production overhead. No, normally we don't write any narration in cost accounting. It's all about the control accounts. But if you wish, you can write. But generally, we don't write the narrations. Clear? But very brief description is required. I mean, it's always advisable to basically write like the way we were writing here. All right, the way we were doing it, like under recovery, recovered from finished goods. So I think a brief narration you can write. It's always advisable. Yeah, because the examiner will come to know that which is this entry is all about. So a brief narration you can write it over. Okay, so you can write. So now let me just explain you through journal entries also. See, finished goods control account to WIP. That means it was the finished goods, the output of WIP. So it is going from WIP to finished goods. So WIP has manufactured it. So WIP must have manufactured the output. It will go to finished goods account. Clear? So WIP will be credited and finished goods will be debited. Manufacturing overhead control account incurred. So they are incurred first. Whenever they will be incurred, it has to route through cost ledger. And again, we must have purchased the materials because it has route through cost ledger. So it must be for material purchase. Clear? You will come to know through entries also. We must have paid the wages. We must have paid the wages. So wages paid. It will come through cost ledger first. Now, from wages, it is going to WIP. That means direct wages. Whatever wages are going to WIP, they must be direct wages. Now, this is a transfer entry. Clear? So, wages we incurred first. See, we have incurred the wages here. And this wages, out of this, direct will go here and indirect will go here. And the total is this. Clear? So, direct is 50,530, I suppose. And indirect is 21,665. So direct will go to WIP and indirect will go to overhead, manufacturing overhead, indirect wages. Clear? So first we have incurred the wages. How we incur the wages? We have incurred the expense through cost ledger. Then these two entries are transfer entries. Direct wages are transferred to WIP and indirect wages to manufacturing overhead control account. Clear? So I hope you must have cleared. I'm explaining you the entries again here through the solution. Cost of sales to finished goods. So basically the goods sold at cost, cost of sales, the goods sold at cost. So from finished goods, it is transferring to cost of sales. Now stores, material transferring for production. It's a transfer entry from stores ledger. It's going to WIP. Anything relating to production will directly go to WIP. Here, finished goods to cost of sales, returns at cost, sales returns. It will again go to stock, finished goods stock. Clear? So from cost of sales, it's going to finished goods because it's sales returns. Yeah. Then cost ledger, material return to supplier. Material is returning back. It's going outside. Material is going outside again to supplier. How it will go outside? From stores, it's going outside. Outside means cost ledger control account. We cannot debit creditor here. Normally what we do when we return the material, creditor account debit to purchases we do, right? So purchases means stores ledger and creditor means cost ledger control account. We cannot debit or credit creditor, debtors, bank or cash. We have to use cost ledger in place of that. Clear? Now manufacturing overhead going to WIP. So manufacturing overheads are getting absorbed in production. I told you manufacturing overheads will ultimately be absorbed to WIP. So manufacturing overhead will go to WIP. Office and admin overhead goes to finished goods and selling and distribution will go to cost of sales. So manufacturing are absorbing in WIP. Clear? So this is the control accounts, the ledger accounts. This was the closing balance. You remember, buy balance brought down the credit balance. I'm just showing you the question. Move to the question. Just look at the question here. You can see these are the closing balances. So cost ledger control account 665,220, the credit balance. Clear? So this is the credit balance. Credit balance will be here. Now the journal entries are posting the same way how we post the journal entry to the ledger accounts. Clear? So this was the returns, material return. So it will be credited. Manufacturing overhead incurred, materials purchased, wages paid. Here all the outside entries will come in cost ledger, and then you have to calculate the balance. So just quickly you can take a note of it. All right, this is cost ledger control account. So we just have to post the journal entries here. Moving to stores ledger, see it was balance brought down, the debit balance which was there in the question. So this we have purchased. So material purchase, stores ledger control account to cost ledger control account. We pass this entry, stores ledger control account debit. So it's on the debit side to cost ledger control account. So this is issued to production. Here, these are material returns. So issued to production means WIP. So WIP debit to stores ledger control account. So stores ledger control account was credited. We have transferred from stores to WIP. This was the returns, material returns. See in cost ledger was debited with material returns, and stores ledger will be credited with material returns. So it's just the posting of that entry, and yes, the balance carried down, the closing balance. Clear? So since it's an inventory account, it has to have some balance. Wages control, we incurred first, we incurred the wages, we transferred the wages, and account is closed. Clear? So WIP, direct wages gone to WIP, and indirect wages gone to manufacturing overhead. So wages control account generally is squared up. There is no balance. So we incur it first and then we transfer it. Clear? So direct we transfer to WIP, indirect we transfer to manufacturing overhead. Moving to manufacturing overhead control account, this we incurred first. Clear? This was the credit balance, opening balance of manufacturing. This was transferred to WIP. All right, that means it was absorbed. Clear? And then wages, the indirect wages came to this. So this we incurred, and this wages was transferred to manufacturing. Now this is it is transferred, the whole, this we have incurred basically, and then it is absorbed in WIP account. All right, and this is the closing balance. All right, so what does this balance mean? This much we have incurred and this much we have absorbed. Clear? So that means we have absorbed less. So this part is absorbed. How much is absorbed? And this part is incurred because it's an overhead account. So this part is incurred and this part is absorbed. That means incurred is more than absorbed. Incurred is more and absorbed is less. There we were. Okay. So incurred was more and absorbed was less. So any balance here is under absorbed, right? It is under absorbed. So when debit side is greater of overhead account, that means incurred is more and absorbed are less. So any balance you are writing by balance CD, that means it is under absorbed. Clear? So absorption part is less. Coming to WIP, the main production account. This is the main production account. So again, this all is transferred from wages, direct wages. It is transferred from material and it is absorbed, manufacturing overhead. Clear? So direct material, direct wages, expenses, manufacturing overhead. So manufacturing overhead ultimately is absorbed in WIP only. Clear? And this is gone to basically the finished goods. That means whatever is the output of the production will go to finished goods to sell. And this is the balance left of WIP. That means semi-finished goods. Clear? So these goods have not been finished now. These are still in process. And what has been finished is transferred to finished goods as output of production. Clear? So I hope you understand the whole sequence of it. Finished stock ledger control account. So it's the opening balance, whatever finished goods were in the inventory before sale. WIP transferred from WIP as the completed goods. And this is the cost of sales. Cost of sales. It is transferred to cost of sales for sale. Clear? And these are sales returns. So these are sales returns at cost. And this is the closing balance. So these are unsold. These are unsold. Okay? Unsold finished goods. So this was the opening balance of completed finished goods which were not sold. This was the current production which were manufactured. These were the goods which are sold, so transferred to cost of sales, and these remain to be unsold. Here, cost of sales. So it is coming from here, if you can see. So it is transferring from finished goods to cost of sales. And this is the return, so it's going back. Clear? These are the returns. So this is the balance carried down, or it can be transferred to basically this costing profit or loss account also. So this is the trial balance. Once you just balance the account, so this is the trial balance. Stores ledger debit balance. So these are the inventory. It has to have a debit balance. Debit balance of if it's a debit balance of manufacturing overhead, that means it's under absorbed. Clear? Any debit balance is under absorbed. Here I just explained you cost of sales debit, and cost ledger is a balancing account. Clear? So it will balance your debit and credit aspect. So it is a balancing account. I hope you must have understood this. Please stay. Production area means the job area where the main production takes place. All right. So where the whole process are taking places. So let's move on to the next question. Students, we'll take a break of 5-7 minutes here. Just take note of this question. Make all the 10 accounts. So material control, make cost ledger control account. Make material control. Material control means stores ledger. So make stores ledger control account. Make WIP, make finished goods. So all the 10 accounts you have to make. Production, administrative, selling, all the 3 overheads are there. So 3 overheads account. WIP, finished goods and cost of sales, 6 accounts. Stores and wages, 8 accounts. Cost ledger control account and costing profit or loss account. Make all the 10 ledger accounts. Be ready with the 10 ledger accounts. Post the balances. These are the opening balance given. So post the balances, whatever balances are given for whatever account, just post them. Be ready with all the 10 ledger accounts for this question. We'll be coming back after 5 to 7 minutes. All right, we'll take a break here. Welcome back, students. So let's continue with this question. I hope you must have made all the ledger accounts. Let me see if there are any queries before we start. Control account is showing balance CD, that is under absorption, and no balance if it is incurred. I don't understand the question, but still whatever I could understand what you are asking. Let me just explain you this. I was just explaining you how it works. So if I could see, if it's a, let us say it's a manufacturing overhead or any overhead account for that matter. All right. So this part is incurred. Clear? This part is incurred, and this part, the credit part, is absorbed. If incurred is higher, the incurred if it's a higher amount, that means absorbed is less, so it is under absorption. So incurred, how we balance the ledger account? That the side which has a greater total and the side which has a lesser total, we write it over here by balance CD. So that means if incurred is 10,000 and absorbed are 8,000, so balance CD is 2,000. So both are 10,000. That means incurred is great and less is absorbed. So it is a balance of under absorption. Under absorption means, so when we will do the OPC, it's a closing balance. So we will write to balance brought down 2,000. It will be brought down, not to of 2,000. So it is the opening balance. Opening balance debit. So debit opening balance means it's an under absorbed balance. Always remember. So whenever the balance of overhead account is giving on the debit side, that means it's the opening balance. And opening balance means if it's in the debit side, it's an under absorption balance. Clear? And similarly, if I just explain you the other way around, if it's now it's a manufacturing overhead control account, again it is absorbed side and it is incurred. If absorbed is greater, so we will write here to balance CD. Let us absorbed is 10,000 and is incurred is 8,000. So you have over absorbed. You have incurred 8,000, but you have absorbed 10,000. So 2,000 is over absorption because absorption is higher. So opening balance will be by balance brought down. Yeah. So in the trial balance, it will show on the credit side. So credit balance of overhead account means over absorption. Debit balance of overhead account means under absorption. Clear? So the balance will, opening balance will come on the debit side only 2,000. So credit balance always means over absorption. Debit balance means under absorption if we talk about overheads. So I hope, Bhumika, you must have understood this. Let's quickly move on to this question. So this was the trial balance, and now these are the entries. Here, so students, I'll be telling you the entries. You just post the entries very quickly. Let us do this question. Material purchased. Please do, all of you should do this question. I hope you have made all the 10 control accounts. You have posted this balance. So in the stores ledger, 2 balance BD. In WIP control account, 2 balance BD. Finished goods control account, 2 balance BD. Overhead control account, 2 balance BD. Under absorption balance. It must be under absorption. Administrative overhead control account, credit balance, over absorption. Credit balance are over absorption, debit balances are under absorption. Clear? Selling and distribution debit, again it's an under absorbed balance last year or whatever you can say. So 2 balance BD, selling and distribution. Cost and ledger account, again it's a balancing account, so it's a credit balance. So please write all the opening balances, the debit and credit respectively. Let's start. You will do the posting. I'll tell you how we will do it together. Good, Bhumika. I'm glad you have understood. You will understand it better after we do this question. Material purchased. We have purchased the material. I'm just writing it over here. You do the posting. Material purchase means, can anybody tell me the entry for material purchased? Come on. At least now you should be able to tell me the entry. Material purchased. Can anybody tell me the entry for material purchase? We are purchasing from outside. So which 2 accounts, control accounts will be included here? And I need the entry for material purchases. I need the entry for material purchases. Material ledger control account debit to cost ledger control account. Very good. Material ledger control account or stores ledger control account. You can write anybody. So I'm using the word stores ledger, not material control. So SL debit, SL is receiving debit and CL is credit. All right. So in stores ledger control account, it will come to cost ledger control account. In cost ledger control account, it will be by SL control account. Clear? So SL account and CL account. In CL, in SL to CL and in CL by SL. Clear? So this is the way you have to do the posting. Do it side by side. Let us do simultaneously. So material purchase, SL account will be debited and CL account will be credited. So to CL and by SL. This is the way you do the posting. So I hope you have understood. Very good. Very good. I'm glad you have now you have understood. Good, great. So let us move to the second entry. Material issued to jobs. Now it's an internal transfer. Cost ledger has nothing to do with it. Material issued to jobs. Which control account is receiving? WIP. Jobs means production. WIP debit and it is going from stores. So SL credit. Clear? So WIP debit and SL credit. Let me write it over here like this so that you understand it. You just do the posting. Clear? So debit and credit. Here I'll tell you which account will be debited and which will be credited. So here SL debit. Clear? And CL credit. Here WIP debit and SL credit. So this is, I think you will understand it better. Material to works maintenance. Works maintenance means works which overhead? Factory, production, works, manufacturing, they all are same. So works means production overhead account, production overhead debit and SL credit. So it's just an internal transfer. It's an internal transfer to all the three. Administrative or materials to administrative office. That means administrative overhead debit, SL credit. So we are transferring to all the three overhead control account. So material is issued to production also. Material is issued to admin also. Material is issued to sales also. Clear? So this is sales. Selling and distribution overhead debit, SL credit. See, SL is material is going to all the four. Material is going to WIP, material is going to production overhead, material is going to admin overhead, material is going to selling and overhead. Every department needs the material, right? So all the departments which they are receiving, the control accounts will be debited and all the four stores ledger is issuing them. See here cost ledger has no role to play. Cost ledger will only and only come when the whatever is coming from outside. You are purchasing or you are paying or you are just incurring. Then cost ledger will be there. Internal transfer from one control account to another control account. Cost ledger has nothing to do with it. All right. I'm stressing on this fact again and again. I hope you understand. Wages direct and wages indirect. First, incur the wages. Even if it is not mentioned, I'm repeating, you have to incur the wages first. So first of all, it will be wages control account debit, CL account credit. First, you have to pass the entry for both, for the total. You have to incur the wages first, whether direct or indirect, I'm repeating. You have to incur the wages first, whether direct or indirect. For both direct and indirect, you have to incur first. Wages control to CL control account. Incur the wages first, then transfer it. Clear? So first wages will be incurred. So wages control account debit to cost ledger control account with the total amount. Then direct wages will go to WIP. So direct will go to WIP, indirect will go to production overhead. All right. Direct wages will go to WIP. So WIP debit to wages control. Indirect will go to production overhead. So production overhead debit to wages control. It's an internal transfer. But first incur it, then transfer it. Direct will be transferred to WIP, indirect will be transferred to production overhead. Students, I hope you have understood wages control account concept. All right. Whether it is given or not, you have to incur it first through cost ledger. Transportation for indirect material. Transportation for indirect material, it must be incurred. Indirect material, production overhead will be debited. Anytime it come indirect, transportation, see, it's coming from outside directly. It's not from stores. Transportation is paid for indirect, so it will go to production overhead and CL will be credited. It's a direct entry coming from outside. It is not coming from stores ledger. It's a transportation cost for indirect material. Transfer it to production overhead control account directly, routing through CL account. Clear? Very good. Okay. Production overhead incurred now. Production overhead now. Overhead is a term for overheads now. Incurred. Incurred means it's coming from outside. You are incurring them first. So production overhead control account debit. CL account credit again. You are incurring production overhead now. Absorbed production overheads. Production overheads are absorbed to which control account? It's an internal transfer. Production overheads are first incurred through CL account. Now they will be absorbed. Production overheads absorbed to which account? Let me see the answer. Yes, cost ledger always will have a credit balance. Darshan, it will always have a credit balance. See, the stores, the WIP, the finished goods account, they are all the inventory accounts. Inventory have a credit balance. You see, inventory account will always have a debit balance. You cannot issue more than you receive. So inventory account will always have a debit balance. So that is why cost ledger control account will always have a credit balance, right? Yes, production overheads absorbed to which control account? Okay, I got one answer. Is this correct? I want more answers. I will not write. I will not continue. Production overheads absorbed. They should absorb production overhead, factory or works or manufacturing. They should be absorbed to which control account? It's an internal transfer. Where it should go? We have incurred production overheads, but how much is absorbed? Out of incurred 242, absorbed are 359. See, they are over absorbed. Production overheads are over absorbed. Where it will go? Very good. It will go to WIP. It will go to WIP and production overhead will be credited. So it is going from production to WIP. WIP will be debited. It's absorbing. So it is going to WIP. So control account, where it is going, it will be debited. From where it is coming, it will be credited. So WIP debit, production overhead control account credit. I hope you are making a posting in all the accounts. You need to post all these entries in all the 10 accounts. Then only you'll understand how we balance them. Clear? Administrative overheads incurred. We are incurring them now. So that means admin overhead debit, CL account credit. We are incurring. We are paying first. Then they are allocated to production. Administrative overheads allocated to production. So where it should go? Admin overheads allocated to production. Allocated means absorbed. They have to be absorbed to production. So just absorb them. And administrative overheads allocated to sales department. So both are administrative overheads are absorbed to production also and to sales also. Just absorb them, take to respective departments. So allocated to production. So administrative overheads are basically, they should go to the WIP. If it is calling them production, it should go to WIP. We'll just check here if it has to go to WIP. And administrative are also allocated to sales. So it will go to cost of sales also. So to production and to sales, it should go to WIP and to cost of sales. We'll just cross check also. Selling and distribution overheads incurred. Now selling and distribution is also incurred. So just incur them. Selling and distribution overhead debit and CL account. Absorbed. They has to be absorbed to COS. Cost of sales. They will be absorbed to cost of sales. Yes, they will be absorbed to cost of sales. Finished goods produced. Now this is important. Finished goods produced. Can anybody tell me finished goods produced? Which account will be debited and which will be credited? Finished goods produced. Just quickly do it. Can anybody tell me finished goods produced? So which account will be debited and which will be credited? And of course, then finished goods sold. Quickly. Finished goods produced. Very good, Manisha. Finished goods produced means it will go to finished goods control account from WIP. So whatever is produced, it will go to finished goods control account from WIP. It's transferring to finished goods because they are produced. Finished goods sold. Finished goods are sold at cost. So which account should be debited and which should be credited? Quickly. Hurry up. Finished goods sold. Tell me about finished goods sold. Finished goods sold, which will be debited and which will be credited. Very good. Cost of sales will be debited and finished goods will be credited. It is transferring from finished goods to cost of sales. So just complete all the entries. Hurry up. You have to post all the entries in all the accounts. Any doubts so far to any entry? Cost of sales to finished goods, very good. Cost of sales to finished goods, administrative will go to, so production overheads will go to WIP, administrative will go to finished goods, selling and distribution will go to sales department. That means cost of sales. So just allocate all them, first incur it and then allocate it. Production to WIP, administrative to finished goods, selling and distribution to cost of sales. Sales, ma'am. Selling and distribution. Selling and distribution. What is the question, Vishali? I didn't understand. Sales. Sales. Okay. What is the entry for sales now? What generally we pass the entry for sales? What is the entry for sales we pass? We pass debtors account debit to sales, right? We pass debtors account debit to sales. If it is a normal entry in financial account, can we use debtors? Can we use debtors in cost accounting? No, we cannot use. We don't use debtors, creditors, cash or bank. So in place of debtors, what should we use? Can you tell me? Darshan, you tell me better, what should be used in place of debtors? The normal entry we pass are debtors debit to sales. What should we use in place of debtors? Yes, cost ledger control account. Debtors we can't use. Cost ledger control account debit to. Again, sales we should use costing profit or loss account. We are not making. Have we made any sales account? Have we made any sales account? No. So in place of sales, costing profit or loss account. So this is the costing profit or loss account, right? So it will be by CL account for sales, right? In bracket sales, right? So this is the entry for sales. So costing, and this is the CL account. It will be to costing profit or loss account, in bracket you write sales. So this should be the entry. Cost ledger control account debit to costing profit or loss account. Sales will come on the credit side of profit or loss account, and it should come on the credit side, right? So cost ledger control account debit to costing profit or loss account. This is the entry for sales. For transferring them, again, sales is coming from outside. So anything coming from outside, we have to use it through cost ledger control account. Clear? So I hope you must have understood. Yes. So cost, not cost of sales. It should go directly to costing profit or loss account. See, sales is at profit. Cost of sales is an account at cost. Cost of sales means sales at cost. But sales is always at profit. So we cannot use sales in cost of sales. We should use costing profit or loss account. It will directly go to costing profit or loss account through CL account. Clear? So this is how we do. I'm just showing you quickly. I'm showing you the accounts. You can take note of this. We'll be sharing this PPT. So I think you can, just do it later also. Okay, Darshan, I'm glad you have understood. So this is cost ledger control account. So this is the opening balance. This was the purchase. And these all were the balances. How much was the sales here? 1443. So this is material control account, purchase, and these all the issue of material. So purchase on the debit side and all the issues on the credit side. Wages control, first you pay, then you transfer. So direct you transfer to WIP, indirect you always transfer to production overhead. Production overhead, again, you first incur them. So incur them, and this you have absorbed to WIP. Production overheads absorbed to WIP. So incur is greater, absorbed is less. So this is under absorption. Incur is greater, absorbed is less. So it's under absorption. Quickly take a note of this. Administration. Again, this is incurred and this is absorbed. So absorbed is higher. So this is over absorption. See, absorption is higher. You have incurred this much and you have absorbed this much. Absorption is higher in administrative. Credit side is greater. Credit side is absorption side. Clear? So absorption is higher. This way you can always remember. Clear? Moving ahead, WIP. So this is the whole production cost. All the cost of production which is charged, and it will be transferred from WIP to finished goods. See, it is transferring from WIP to finished goods. And finished goods, it is transferring to cost of sales. So finished goods, it will transfer to cost of sales. These are the unsold. All right. So I explained you everything. I think you just balance your control accounts. So this again you have incurred, and this is you absorbed. So again absorbed is higher. So this balance is over absorption. Absorption is higher, so this is over absorption. Selling and distribution over absorption balance, the closing balance. Cost of sales, so this is transferred from the finished goods. And this is transferring, cost of sales transferring to costing profit or loss account. Here you can see cost of sales will ultimately go to costing profit or loss account. So this is cost ledger control account. Everything, it will always have a credit balance. See, it will always be credited. This is sales, which I was talking about. So the entry was CL account debit to costing profit or loss account with the sales. Yeah. The costing profit or loss account, see, sales is coming from there, and cost of sales, it is coming from the cost of sales account. And this profit, the profit from costing profit or loss account will again be transferred to cost ledger control account. The costing profit will again be transferred to cost ledger control account, and the final balance, cost ledger control account will give you the final balance. So costing profit or loss account will be squared up. There will be no balance. The profit will again be transferred to cost ledger control account, and cost ledger control account will give you the final balance after taking the profit from costing profit or loss account. All right. So students, I hope you have understood this. Moving to, so this is the trial balance. Material, always have a debit balance. Production overhead, debit balance. Administrative overhead, credit. Selling and distribution, credit. So these are over absorbed balances. Debit are under absorbed balances. We're talking about overheads. Material, WIP and finished goods, they are inventory accounts. So of course, they will always have a debit balance. Cost ledger, to balance the debit and credit, it will always have a credit balance. So students, hope you have understood the basic concept of it. If you have understood non-integrated, you will very, very easily understand integrated. There is just one difference. So we are moving to integrated system. I hope you have understood the non-integrated. Integrated, we make one set of books only one set of books. Clear? So we have to merge costing and financial account both. There is just one difference. I'll try to explain it in one sentence. I will tell you what's the difference, and it will be so easy for you to make integrated. Students, how we make now let me just explain you here. How we make the financial. Clear? So this is financial, this is cost, so this is the separate, non-integrated. Clear? And then this is integrated. So if we talk about material purchase, what entry we pass in financial account? We pass purchases account or goods account, whatever, debit to cash or bank or vendor, whatever. Here, so in financial account, when we purchase material, we pass the entry purchases account debit or goods account debit or whatever material account debit to cash or bank to creditor. In cost accounting, purchases, we convert it into stores ledger control account. Here, I'm talking about non-integrated, what we have just done. All right. Stores ledger control account debit. In place of this, we use to cost ledger control account. So this, we just did this here. In financial, we use this entry. In cost ledger, we use totally different aspect. We use the control account. Now we have to make integrated. The only difference between integrated and non-integrated is we do not use cost ledger control account. We do not use cost ledger control account. Rest everything is same. I'm repeating. Whatever entries you have just passed in non-integrated, everything, every entry, that means every entry within the system for transfer from stores to WIP, from WIP to finished goods, from finished goods to cost of sales, from cost of sales to costing profit or loss account, production overheads to WIP, admin overhead to finished goods, selling and distribution to cost of sales, every entry where cost ledger control account is not used, all those entries will remain same, whether integrated or not integrated. I'm repeating. All the entries where cost ledger control account is not used, those entries are same under integrated and non-integrated. The only difference between two systems are in integrated, we do not use cost ledger control account. In place of cost ledger control account, see, we have to use one aspect of costing, one aspect of financial. So in this aspect, both are costing. So here we will take this out from, this will remain. So stores ledger control account will remain in integrated. Stores ledger control account debit. So one we have taken the costing entry and one we will take the financial. So we will take cash and bank, to cash and bank and creditor, that we will take. So see, we are merging both. One we have taken of cost. So this is taken as cost. And the second one we have taken for financial part. So one aspect we will take the costing wala part and one aspect we will take the financial part. So that means we are merging the costing and financial. So I'm repeating, in integrated, in place of cost ledger, we will use the actual debit or credit which we used in financial. We will not using cost ledger in integrated system. Clear? We will be using cash and bank and debtor and creditor only. That is the only difference. In entries where cost ledger control account is not used, The internal transfer entries, they will remain same for integrated and non-integrated. Students, this fundamental is very, very important. If you have understood this, you have understood the integrated. So it's very important to understand non-integrated first. If you have understood non-integrated, I tell you 95% of the integrated also you have understood. Only difference is in integrated, we do not use cost ledger control account. In place of that, we use the actual debit or credit of the financial. So one aspect we take as for costing and one we have taken for financial. So we have integrated both. All right. So students, I hope you have understood the integrated one. Let's quickly do this question. Here, so now I'll just tell you the journal entry and rest everything is same. All right. So we are now starting with integrated. Let's just pay attention. We'll just discuss the entries. So debit and credit. Clear? I just tell you the debit and credit. We are doing integrated now. Okay, so yes. We are doing the integrated now. Raw material purchase. All right. Raw material purchase. We have done the exact entry. Good. Very good. Raw material purchase. We are doing integrated. So one aspect of costing, one aspect of finance, because we have to integrate both. Clear? So stores ledger control account will be debited. So here we have taken the costing part. Now, normally what we used to use, stores ledger debit, cost control ledger credit. But here integrated, we will not use control ledger. We will be using the, so this is credit. Now let me first write the credit. Yes, so we will be writing cash or bank. Cash or bank or vendor, whatever you wish to write. You can write cash also, you can write bank also, you can write vendor also. So raw material purchase, now we have integrated. So this aspect we have taken off cost and this account we have taken off financial. So we have integrated both. Clear? So both are happy. Cost system is also happy. We have taken their debit aspect and financial people are also happy because we have taken their cash or bank or vendor account also. So we have integrated both. This is called as integrated system. We are not using both control accounts. Yeah. So in non-integrated, debit and credit both are control accounts. In non-integrated, what was happening? Debit was also control account and credit was also control account. So we are just using the costing. But here we are using one of cost and one of financial. So students, I hope I'm able to make you understand this. So I'm just erasing it off. Let us move on. We'll just discuss the entries here. Yes. Yes. Material ledger control account debit and bank account credit. Very good. Direct material issued to production. Issued to production. It's an internal entry. Do we use cost ledger control account here? No. Since cost ledger control account has nothing to do with it, this entry will be same in integrated and non-integrated both. Clear? So issued to production, SL account debit to production, WIP, it's going to WIP. Internal transfer will remain the same. WIP control account debit to stores ledger control account. Internal transfer between one control account to another has no change. It will be same under integrated and non-integrated. I repeat, the difference between integrated and non-integrated is we do not use cost ledger control account. That is all. In place of cost ledger, we use cash, bank, vendor, creditor, debtor, etc. In an entry where cost ledger control account is not there, there is no change between integrated and non-integrated. Students, I hope you have understood this. Clear? Good. Wages paid, now paid again. The entry with cost ledger will not come. Paid. So wages paid, it will be wages control account debit. Since it's paid, you can credit cash or bank, whatever. Clear? So since it's paid, see, we are not using CL account. It will not be used. We will be using cash account. Clear? So wages control account debit to cash account or to bank account, whatever, because it's actually paid. So cash or bank. Wages charged to production. Charged to production. Wages charged to production. That means direct wages. Direct wages will go to WIP and wages control will be credited.
So WIP control will be debited, wages control will be credited for direct wages. See, this is direct. So indirect, you have to transfer to production overhead, whether it is mentioned in the question or not. You have to transfer direct to WIP and indirect to production overhead, whether it is given in the question or not. Clear? So direct is given in the question, indirect is not given, you have to transfer it. So transfer indirect also. So this indirect will go to, so what is the entry for transferring indirect? What is the entry for transferring indirect? Manufacturing overhead account, control account debit to wages control account. Clear? For indirect wages. You have to pass this entry, whether it's mentioned in the question or not. So 70% charge to WIP, 30% will go to manufacturing overhead. All right, students, I hope you have understood this. Direct wages have gone to, so 70% direct wages have gone to WIP and 30% indirect in going to manufacturing overhead. Manufacturing expenses incurred, that means they are just entering the system. So manufacturing overhead control account debit to cash or bank, whatever. It's incurred, so you can assume as paid. Otherwise, you can credit creditor also. Yes, factory overheads to wages control for indirect wages. So incurred. Charge to production, that means absorbed. Absorbed entry, cost ledger has nothing to do with absorbed entry. So this entry will remain same in integrated and non-integrated. So WIP will be debited. Charge to production, WIP will be debited. Manufacturing overhead will be credited. WIP will be debited, manufacturing overhead will be credited. Very good. Yes, Darshan, factory, manufacturing, production, works, all are same. I'm writing it over here. I told you earlier also. Factory overhead, manufacturing overhead, production overhead, or works overhead, all are same. You can use any, just take a note what term is used in the question. In this question, it's used manufacturing. So use manufacturing. In the earlier question, it was used production. So use production. In some other question, it can be used works overhead. So use works overhead. In some question, it's used factory overhead. So use factory overhead. You should open that account which is mentioned in the question. So in this question, it's mentioned manufacturing. So use the term manufacturing overhead control account for this question. I hope it's understood, Darshan. All right. So any term can be used. You have to see which term is used in this question or whatever in the respective question. So if it is manufacturing, you use manufacturing overhead. If in the question is production, you use production overhead. All right. So depending upon the question. Selling and distribution cost. Cost means first incur it. You have to incur it first, whether it's mentioned or not. So selling and distribution cost, it has to be incurred first. So selling and distribution overhead control account debit to, since it's not mentioned paid, you can use it creditor also. Since it's not mentioned, it's paid or incurred. You can use cash or creditor, whatever. First incur it and then you have to absorb it. There is no information of absorption, but you still have to absorb. See, production or selling and distribution or administration, you have to absorb them, whether it's mentioned in the question or not. If nothing is mentioned, absorb it at the, whatever is the balance in the account, absorb it to the accounts. Clear? So for example, there is a production overhead account. All right. So let us say cash, production overhead incurred. Clear? It is 10,000. Now, no absorption information is there that how much production is absorbed to WIP. You have to absorb it. Just absorb the entire amount. Clear? It has to be absorbed. So whether it's mentioned in the question or not, if it is mentioned, do it accordingly. Like it is mentioned how much manufacturing is absorbed. But for selling, it's not mentioned. Absorb it again. You have to absorb. Absorb the full amount. How much it is incurred, you absorb the full amount, but you have to absorb it. Yeah? Finished goods at cost. Again, finished goods control account to WIP. Finished products at cost means finished goods control account debit to WIP. Sales. Sales means no cost ledger has to be there. So sales means what is the entry for sales you pass? Debtors account debit to sales. Debtors will be debited. Here, no CL account. Debtors account debited. You can write costing profit or loss account. Clear? For and bracket mein you can write sales. So for sales, we used to do CL account debit to costing. No CL account has to be used in integrated. Use debtors account debit. Debtors account debit to sales or costing profit or loss account. Closing stock is nil. Receipt from debtors. This is a normal financial entry. Receipt from debtors. So what will be the entry? Cash or bank to debtors account. Integrated, so you can use debtors. You can integrated. We use cash, bank, debtors, creditors, vendors. We use these accounts. Payment to creditors. Creditors account debit to cash or bank or whatever it is there. Okay. So this is how we do the integrated. So again, you have to understand non-integrated. Again, it's very easy to understand integrated once you understand non-integrated. So in integrated, we use cash, bank, debtor, creditor, vendor, suppliers. We use it. All right. So I hope you've understood integrated. Let me show you the solution in proper way. So these are the entries. See, we have not used CL account. In spite of CL, we are using creditors, debtors, payables, receivables. Internal entry has no change. Internal entry, no change. Clear? Then again, wages paid. So see bank account. CL we are not using. Internal entry, it's an internal entry, no change. So where CL is there, you have to replace it with cash or bank. Otherwise, all entries are same. See, integrated and non-integrated. Very good. Vinay, we are using cash or bank. Vinay, see, we cannot assume cash unless it is mentioned. Is it mentioned cash sales? No. So it's always better to use debtors. We cannot assume cash or bank, but we always can assume debtors or creditors. Clear? So, but if you want to write cash or bank, you can, but write an assumption. We are assuming it as cash sales. If nothing is mentioned, students, it's always better to use debtors. Clear? It's a safe thing to do it. But you can use cash or bank. Again, you have to assume it. For debtors, you don't have to assume anything. You can write debtors to sales or costing profit or loss account. Clear? So a good darshan that you have understood. So again, the same which I have there's just one difference and rest is all the same. All right. And just give you a final look of the entries. Debtors debit to sales. Sales, or you can use costing profit or loss account also. To sales also you can do. Debtors, so we in integrated, we actually can use cash, bank, debtors, creditors, payables, receivables. We can use these terms. In non-integrated, we are not supposed to use this. Clear? So this is one question I think you can prepare. This is a similar question, but fully integrated. So in place of cost ledger, you know what you have to do. Rest, everything is same. So this is a practice question. The PPT will be the PPT. Vaishali, closing stock, if it's there, it will automatically be reflected in the account. It will be the balance carried down for the finished goods control account. So if closing stock is nil, that means there will be no balance carried down in finished goods control account. Everything will be transferred to cost of sales. It means that. Okay. So talking about this question, you can do this practice question. This is the question and all the entries. We have done this. So you can just practice this question once you get the presentation. Okay, so let's move to the last part of the segment, which is called reconciliation. Now, students, when we use reconciliation, integrated or non-integrated, tell me. When we should use reconciliation, integrated or non-integrated? Can anybody tell me? Reconciliation can be used either in integrated or non-integrated. So, in which system we have to use in reconciliation? Integrated or non-integrated? Non-integrated, yes. So if we are making non-integrated, cost and financial we are making separately, then we have to reconcile because we have costing profit, clear, and we have financial profit. So we have two profits. We cannot have two profits. We have to have one profit. Clear? So we will reconcile the profit of costing and the financial. So here we do it. Let us say how we do it. Let me just explain you. See, the thing is, the first fundamental, the only thing you have to understand is we have to keep one thing as a base. We have to think the way we use bank reconciliation. I hope you must be aware of bank reconciliation. So let us think that financial profit is correct. All right. So we have to start with costing profit. So this is the costing profit. And we have to think, we have to change the costing profit in terms of financial profit. So do whatever is done in financial profit. I'm repeating. Take financial profit as correct, as the base. Then change the costing profit to financial profit. So since we have to change the costing profit to financial profit, we have to start with costing profit for the reconciliation. So what we are reconciling? We are reconciling costing profit with financial profit because we are taking financial profit as the base. You can take any of the profit as the base. I'm just giving you an example. If example, we have taken financial profit as the base, that means we have to reconcile costing profit. So reconciliation will be for costing profit. We have to change in accordance with financial profit. The only fundamental concept is do whatever is done in financial profit. If in financial profit, let us say cost is 10,000 and you have taken cost as 8,000. That means you have to increase the cost to 2,000 more. Your cost is 2,000 less. You have to increase the cost. If you increase the cost, profit will decline. So decrease the profit, subtract the profit. Clear? If we increase the cost, that means profit will decrease. If we decrease the cost, profit will increase. So if I have to increase cost, that means you have to subtract from the profit because this is profit. My profit will decrease if I actually increase the cost. So if my profit is 1 lakh, and I have to increase the cost from 8 to 10, that means I have to further deduct 2,000 from the profit. So do whatever has been done in financial profit. All right? Yes, it's non-integrated. Very good. Here. So let us just try to understand. See, this is the data. Here, so this is the data. We have the opening stock. Try to understand the question. We have the opening stock of finished goods and WIP. That's the one more concept is in financial account, we use the actual cost. In cost account, we use the absorbed cost. So there has to be difference. So remember, most of the time, the difference has to be in overheads. In financial, the overheads are actual overheads incurred. Clear? And in costing, the overheads are absorbed. That is why the difference. So in all the three overheads, there has to be difference. Here, stock, the closing stock will generally be different. Actual direct material cost, we always charge it as actual. Financial and cost both are actual. So generally, there is no difference. Generally, all right. So let us see how it goes. First, you have to prepare the profit or loss account. Since we have given the data, we don't have the accounts. So you have to make profit or loss account and you have to make cost sheet also, costing sheet. Both you have to make, then you have to reconcile. So here you don't have to make accounts. You have to make if a reconciliation question comes, you have to make a profit or loss account first, and then you have to make a cost sheet first. Clear? So let us see how it is done. Let us make a profit or loss account first. So I'm just making the profit or loss here. You also make it. Profit or loss means opening stock. So here we write opening stock. So 148,750. I'm just writing 148,750. Profit or loss account. I'm making a format, a rough format here so that you understand. You also make side by side. Profit or loss account, debit all expenses, credit all incomes and gains, right? And of course the stock. So profit or loss means it's a combined account, trading, manufacturing, profit, all combined we are making. So opening stock, we always debit in profit or loss account. So I'm debiting it. So this we have done. Raw material consumed, again it's an expense, 15,60,000. Direct labor, again it's an expense. Factory overheads, again it's an expense. So I'm writing all the expenses combined together in the profit or loss account. Goodwill written off, I'm writing it over here, goodwill written off. We write it in profit or loss. Administration overhead, I'm writing the production part on the top first. Dividend paid, again it's an expense to us. Bad debts, again we will treat it as a loss, bad debts. Selling and distribution overheads, again an expense. Interest received, I'm writing it over here, it's an income, indirect income. Rent received, indirect income. Sales, I'm writing it over here, sales. Yeah. Is there anything else? No, that is all. Okay, there's closing stock also. So closing stock, I should write it over here, 82,500. I'm writing closing stock over here. So this is 90,000 interest, 77,334. Clear? So I've written all the expenses on the debit side and the stock, all the incomes and the closing stock on the credit side. Can anybody tell me the net profit? I've not done anything profit or loss account. I've just posted all the figures inside the profit or loss account. Debit all the expenses, credit all the incomes and gains. I'm just making a combined. Tell me the profit, net profit or loss account. Quickly, can anybody tell me the profit or loss account? Just quickly tell me the profit or loss account. Or shall I calculate or shall we just see? I hope there has to be, okay. So this is the rest part of the information. See, these are the cost records. The cost records are providing you. Please calculate the net profit for the time being. This is the second part of the question. Cost records, see, the factory, what I was telling you about. Factory overheads, administration and selling are always absorbed or recovered. Clear? Opening stock, this is the cost record. So this will take the information when we make the cost sheet, right? So work in progress, you have to make the financial records and cost records. You should have the profit under both. Can anybody tell me the profit or net profit of financials? The financial we have made. Clear? Let me see if this is okay. So this is the profit or loss account. This is the profit or loss account, exactly the same. This is the profit, 67084. See, all the expenses are debited, all the incomes are credited. Just make a normal profit or loss account. We need to have this profit basically. 67084 is the profit as per financial records. The financial profit is with us. The financial profit, take note of this financial profit, 67084 is the financial profit. All right. Now the costing profit. So how we have to take the costing profit? Let me make the cost sheet here only so that you understand till where I can go. I can go till here, I think. Where is the cost sheet? Okay. Yeah. Okay. So this is the cost sheet. Let me quickly, where should I make the cost sheet? Let me make the cost sheet over here only so that you will understand it better. Students, I'm erasing it off. Yes. So I hope you know the profit. Now let me make the cost sheet here only so that you understand. So we have done with the profit or loss. We know the financial profit. Now let us start with the cost sheet. So we will make a cost record now. Cost sheet is the compilation of all the accounts. Clear? So we'll start with raw material first. Raw material we have. Any information of raw material in the question? No. So we have overheads here. So raw material will be sale. So raw material is 15,60,000 raw material. Direct labor will remain the same, 9 lakh direct labor. So we have prime cost. Quickly, this is the cost sheet only, 15,60,000 plus 9 lakh. So 24,60,000 is my prime cost plus factory overhead. Overheads we always absorb. So absorption is 60% of direct wages, factory overheads are absorbed at 60% of direct wages. Direct wages is 9 lakh. So 60%, 5,40,000 factory overheads. See, we are absorbing 5,40,000 factory overheads. So we have gross works cost of 30 lakhs. Gross works cost of 30 lakhs. Add opening WIP and closing WIP. I hope you are familiar with you. If you don't know cost sheet format, you cannot do reconciliation. Here, opening WIP, we have some information. The company values WIP at factory cost for both financial and cost. So WIP is same for financial and cost. WIP is same for financial and cost. So WIP opening 64 you add and closing WIP you deduct. Closing is this. 77334. 77334, you will get works cost. So works cost 30 lakh plus 64,000 minus 77334. So it's 29,804 times 6. Clear? 29,804 times 6. So 29,86,000 is your works cost. To the works cost, we add admin overheads. Admin overheads. We absorb admin overheads are recovered at 20% of factory cost. Admin overhead are recovered, are absorbed at 20% of factory cost. This is our factory cost. 20% of factory cost. 5,97333. See, I'm just calculating side by side. You also do it. Admin overhead you add, you get cost of production. So how much is the cost of production? 29,81234. So it's 35,83,9 and 9. This is cost of production plus finished goods opening stock. Finished goods opening stock we have. So if there is any information, finished goods, opening stock of finished goods is valued at 208 per unit. Opening stock of finished goods is valued at 208 per unit. So how much is the opening stock units? 875. So it's 875 into 208. 875 into 208. 1,82,000 opening stock of finished goods. 1,82,000 opening stock of finished goods. We have been given for cost records. See, for cost records, opening stock is 208 per unit we have to use. Clear? Minus closing stock of finished goods. We always value closing stock on the basis of cost of production. So how much is the cost of production? See, opening units are 875 plus production, we don't know the units, minus sales. Sales are 14,500 and we have the closing stock 375. So how much is the opening stock? 14,500 plus 375 minus 875. Production comes to 14,000 units. Production comes to 14,000 units. How you calculate the closing stock of finished goods? Closing stock, we never take this. We always calculate, we value finished goods closing stock. I hope you know this while doing the cost sheet. We always value the closing stock on the basis of cost of production. So this cost of production is for 14,000 units. We want the closing stock. How much is the cost of production for 375 units? So 35,83,999 divided by 14,000 into 375. The closing stock will be 95,999. This is the closing stock of finished goods. 95,999. Closing stock of finished goods is always valued on the basis of cost of production in cost accounting. This is a very, very important concept of cost sheet. I assume you must have done cost sheet before this. Clear? Practice cost sheet if you don't know the cost sheet. And before doing reconciliation, you must practice the cost sheet. Clear? So this is the closing stock of finished goods we have calculated. So now how much is the cost of goods sold? 35,83,999 plus 182,000 minus 95,999. 36,70,000 is your cost of production, cost of goods sold. 36,70,000 is your cost of goods sold plus selling and distribution overheads. It will always be added before cost of sales. Selling and distribution are charged at 8 per unit sold. 8 per unit sold. How much units are sold? 14,500 into 8. 14,500 into 8. 1,16,000 is the selling and distribution overhead. So we have reached to cost of sales. Cost of sales is 37,86,000 cost of sales. Add profit. We know the sales. Sales is 41,60,000. It's mentioned over here. See, you can see sales is over here. So sales is the same. The balancing figure is your profit. 3,74,000 is your costing profit. I'm just going through again. Cost sheet, raw material, direct labor, we get the prime cost, the first landmark. To the prime cost, we add factory overheads. It's always absorbed. We get gross works cost. To gross works cost, we adjust WIP stock. Opening, we add. Closing, we deduct. We get the works cost, the second landmark. Then we add the admin overhead. Again, it's absorbed. Admin overhead is absorbed. We get cost of production. To cost of production, we adjust the finished goods stock. Opening, we add. Closing, we deduct. We get the cost of goods sold. To cost of goods sold, this is the third important landmark. Then we add the selling and distribution overhead. Again, it is absorbed. We get the cost of sales, the fourth landmark. We have the sales. We write the sales, and profit can be the balancing figure. So we have the financial profit. We have the cost profit. We have both the profits now. Now it is time to, yes, this is the costing profit. So now we are up to the reconciliation. Students, we have the costing and we have the profit. So we will be moving to the, let me just show. So this is the profit or loss account. Cost. This is the financial profit. This is the cost sheet. You can just see here. This is the cost sheet we have just made. I'm showing you the fair form of it. See, raw material consumed, direct labor, the first landmark, prime cost, factory overheads, then the factory cost, works cost, manufacturing cost, production cost, all where. WIP stock we adjust here. We get the second landmark, factory cost. We add the administration overheads. So it is also absorbed. Factory overhead is absorbed. Administration overheads absorbed. All the three overheads are always absorbed in costing. We get cost of production. See here, closing stock valuation is done. Production cost of goods sold. Cost of sales and profit. So we have got the profit here. Selling and distribution, we have another landmark here. Again, it is absorbed at 8 per unit of sold. All the three overheads are always absorbed. Now let us start the reconciliation. So students, in reconciliation, we are taking the costing profit. We will reconcile the costing profit. That means we are taking financial profit as the base. See, the end result will be the financial profit. So it's reconciled. So costing profit, we will convert it into financial profit. That means we are reconciling the costing profit. We are taking financial profit as the base. So we are converting costing into financial profit, right? Do whatever is done in financial profit. Whatever is done in profit or loss account, do that. So admin overhead. See, look here. Admin overhead, this is the costing overhead and this is the financial overhead. Clear? Just see which amounts are different. Admin overhead in costing, we have absorbed the admin overhead in costing was 597,333. In finance, it was 5,90,000. That means in costing, you have over absorbed. You should have absorbed 5,90,000, which is actual. But you have absorbed 5,97,333. That means 7,333 you have over absorbed. You have overcharged. Because you have overcharged, it must have reduced your profit. So add it back. Add it back. Add overcharged overhead. You have overcharged the admin overhead in costing. That has reduced your costing profit. Add it back. So it will be added. Clear? Opening stock overvalued. So opening stock 182,000. 182,000 was in costing. And in financial, it was 148. Opening stock, you have overcharged. That means opening stock is on the debit side. That means opening stock, you have overcharged in costing. The costing profit has reduced to this extent. It's overcharged, overvalued. Added back to the profit. You have overvalued opening stock in your costing record. Interest received, rent received, you have to add it to the costing profit because we have not taken. We have not taken this in costing profit, but we have taken in financial profit. Do whatever is done in financial account. So you have to do whatever is done in financial accounts. As simple as that. If anything amount is overcharged, add it back. If any income is not taken, add it to the profit. Do whatever is done in financial account. Whatever is the effect, you have to take it into cost account also. So interest received and rent received, we have not taken in costing. We have not added to our income. Add it back now. So you add it to your costing profit because we don't take it in costing, but we take it in financial, and we are taking financial as the base. Do whatever is done in financial account. Just take that effect. Clear? Factory overhead under recovery. So factory overhead is 6 lakh was in financial, 5,40,000 was in costing. So factory overhead, it should be 6 lakh. But in costing, you have taken 5,40,000. That means you have undercharged 60,000. You have to reduce it further from your profit. Your factory overhead should be 6 lakh charged to costing. But in costing, you have charged 5,40,000. You have charged less, under absorption. So you have to charge it more. So if you will charge more, your profit has to reduce. That's why you are reducing your profit. Reduce 60,000 from your costing profit because you have charged less. Clear? Selling and distribution under absorbed. In financial, you have taken 122. In costing, you have taken 1,16,000. That means in costing, you have charged less. You have absorbed less. 6,000, you have absorbed less. Your profit is higher. So reduce your profit further by 6,000 because you have charged less in costing. Clear? Since you have charged less expense, so your profit has increased. Reduce your profit. Clear? So 6,000, reduce your profit. You should have charged 122, but you have charged 116. Closing stock overvalued. In closing stock, you have 96,000 you have used in costing, but in financial closing stock is 82,500. You have overvalued closing stock. If you overvalue closing stock, your profit will increase. Reduce your profit. You have overvalued your closing stock. If you overvalue closing stock, your profit will increase because it comes on the credit side. So you have to reduce your profit. You have extra charge closing stock. So that means your profit, you have escalated your profit. Reduce it. Goodwill, dividend and bad debts. We do not take in costing, now charge it. I'm repeating. Goodwill, dividend and bad debts is an item of financial account. We have not charged in costing, but we have charged this in financial. Now you have to reduce your profit to match it to financial. So all the three you have to subtract. Clear? These, so 5 items are those. which we do not take in costing, but because we have to match with financial profit, we have to take their effect here in reconciliation. Only then the costing and financial profit will match. Clear? So these three and these two are taken only in reconciliation because we have to match the profit. Just to match the profit, we have to take their effect. They will not be taken in the cost sheet. Clear? So this is the way how we do it. I'm repeating the concept. Students, in reconciliation, there are very simple concepts. Number one, you should be ready with your financial profit through profit or loss account. You should be ready with your costing profit through cost sheet. Third, take the base. If you are taking the base as costing profit, you will reconcile the financial profit. If you are taking the base as financial profit, you have to reconcile the costing profit. In this question, I'm taking financial profit as the base. That means my financial profit is correct. I have to change the costing profit to match this financial profit. So if I have to change my costing profit, that means I'm reconciling my costing profit. So this reconciliation is for the costing profit. I'm reconciling the costing profit and changing it to financial profit. So the only fundamental is do whatever is done in financial profit. If something is added more, you also do it. If something is charged less, you also do it. So you just have to consider financial profit as correct. You have to do whatever is done in financial accounts, change the costing profit accordingly. So if the expense is more in profit, reduce the costing profit also. If your expense is less in financial, add to the costing profit. Clear? If your income is higher in costing, reduce your profit. If your income is less in costing, add it further. Clear? So do whatever is done in financial accounting. This is the basic concept of reconciliation. Whatever you're taking as the base, treat it as correct. Do it accordingly. All right. Rajiv Kumar, I just explained you can take any profit as the base. In this question, financial profit is taken as the base and we are reconciling costing. You can do it other way around also. So students, what see this question, we have taken cost accounting. We are reconciling cost accounting with profit, financial profit. You do this question, repeat it. Take the costing profit as the base. All right. So what I'm trying to tell you is, in this, do the another case. All right, this you should be a practice. Take financial profit as the base, 67083, and convert it into costing profit, 374,000. So this is the second way of doing it. Do it. So both ways you should do. Both ways you should solve. Only then you will understand. I'm telling you again. Reconciliation, whenever you are doing reconciliation, that is the way I used to do it. I used to reconcile both the ways. I used to reconcile costing with profit, financial profit, and then I used to reconcile financial profit with costing profit. Both ways you practice. I'm telling you, your concept will be thorough. So do this for every question of reconciliation, must practice both ways. In this question, they have reconciled costing profit with financial profit. You repeat this question, you reconcile financial profit with costing profit. Do it both ways, you will understand. The only fundamental is whatever you're taking as a base, do it accordingly. If you are taking financial profit as the base, take everything as per financial accounts. Clear? So this is the basic fundamental. I hope you have understood cost accounting system. Good. So I'm glad students have understood. So that's all for today. We'll be sharing this PPT with you. There are some practice questions in this slide. So you can always practice them. And whatever we have done, do all the questions again. Make all the accounts, all the 10 ledger accounts, you should do it. Practice it over and over again. Cost accounting system is best understood only if you practice. Clear? And reconciliation, the final word I'm again saying, Do reconciliation both ways, always. Clear? So that you are thorough with the concept. Reconcile costing with financial and also reconcile financial with costing. Clear? So with this, good. Any queries? No. Okay, students. So that's all for today's session. I hope you've understood the concept. We'll meet you with some other unit in the next session. Till then, happy studying, happy learning. All the best to all of you. Have a good day. Thank you.